everyone, and welcome to today's morning report. Chart appraisers with me, Rich Perry, market analyst. That's Hantech Markets on Friday, the 14th of July. We've got a fairly mixed and consolidating open today. Really, not a great deal of direction, very mild amount of dollar weakness, but markets are generally consolidating in front of the big tier one key economic data that we got from the States this afternoon. Let me just show you the board. So we've got the euro, sterling, mildly higher. Aussie sort of is higher as it continues a very strong run higher to sort of multi-month highs. It's broken out to the highest level since November 2016. Generally speaking, the markets are basically flat though. Look at those equities, sort of all doing pretty much nothing. And that's sort of an interesting sort of aspect of the fact that we're waiting for inflation data this afternoon. We had sort of that testimony from Janet Yellen this week, which sort of cautioned or suggested the Fed was cautious over possible inflation becoming persistent. And that sort of means that the market is going to focus, I think, quite significantly on certainly inflation trends. And that brings us squarely into today's data, which is the US CPI. Now, CPI has been falling. Let me show you the charts of the US CPI. Has been falling for, well, pretty much throughout the last few months, really, tracking lower. And it's expected to fall back up to 1.7% on the headline. On the core data, it has already been falling throughout this year. Expected to come in again at 1.7%, but this sort of doesn't sort of bode especially well for the Fed, considering the Fed sort of is in this tightening cycle, and it's sort of trying to sort of persuade the markets that its tightening is going to be continuing, even though inflation is a bit subdued. It's not really taking off. Average hourly earnings last week on the payrolls didn't sort of pick up, and yeah, it's a little bit subdued. So what the market is expecting is just again this inflation data to be a little bit subdued. And what we have seen subsequently to Yellen's testimony is this is the Treasury yields, which have dropped away now. A little bit of a rebound on the 10-year yesterday, but dropping back again today. And I think that 10-year is the one to watch. If the inflation data comes in disappointingly, we'll see that 10-year sharply lower, I think, and that will drive a US dollar weakness. And I think that will be an interesting market mover this afternoon. So I think in front of that, that's what we're looking out for this afternoon to be the main driver of direction today. So 1:30. You've also got the retail sales data for the States. So that's the CPI data this afternoon, 1.7 on both year-on-year data. But then the retail sales is expected to be 0.2%. Now, last month we had a very disappointing 0.3% negative on the month-on-month. Expected to bounce back to 0.2 by 0.2 this month, but that's still not amazing. But yeah, I think that will be an interesting bit of data, sort of aside from the inflation data this afternoon at 1:30. Then we've got the industrial production, 0.3% positive on the month-on-month reading, and capacity utilization increasing. That's pretty decent. And then finally, we've got the Michigan sentiment, 95.0. Which is a very mild tick lower from the upwardly revised 95.1 that we had last month. That was the prelim reading, 94.5. Very annoying that Reuters do that. But yeah, so that's this afternoon. A lot of US data to look out for. That takes me to my chart today, which is silver. Now, the precious metals have been rolling over. Have been rolling over recently. We had that big breakdown on the intraday basis below 1559 support. Never really held the close. 1558 was the absolute close low, but never really held that break. Now, it sort of rolled over again at the underside of that resistance, 1601. Wednesday's high was 1602, 1603. So certainly that these old supports are becoming new resistance levels. So if that 1559 level breaks on a closing basis, you could really sort of reopen the downside. You've got these spike lows that we've had in the last sort of week or so. Force in 86, it being the absolute low, 1516 and 1542. But certainly it is sort of continuing this sort of breakdown of this big support area, 1559 to 1601. This old big pivot, which is a real disappointment, isn't it? Look how far back that goes. So you're back into the realms of if you really do sort of decisively break 1559, you're sort of back into the realms of this sort of 1475 April 2016 low, and that could easily be seen. I think look at the momentum indicators; they are negatively configured. RSI is just sort of rolling over again, having sort of unwound slightly. MACD line's not really appreciably improved, and the stochastics are already sort of rolling over again. So it looks like it's putting pressure on that 1559 old support once more. You've had this hourly chart, which, as I said, failed at 1602, but you've also seen a little minor support or minor pivot support failing at 1574 area, 1573, 74, and that's sort of becoming a basis of resistance now. So it seems as though you're sort of rolling over. Rallies are going to be seen. There's a chance to sell. It looks like if we sort of break below 1542, as I said, these old lows could easily come under pressure. 1516 being the next one on the from Monday. So yeah, pressure growing on silver as it is on gold, I believe. So I wish you good luck in your trading today, and I will speak to you later. Thank you.